Welcome to today's video. So today I'm going to be talking about how you can invest in the stock market without having a lot of money. So this is a problem that a lot of us can run into. We're passionate about the stock market, we're passionate about investing, and often I hear retail investors say, but I just don't have a lot of money, so what's the point? So today I'm going to give you 3 creative strategies that you can use to raise money so that you can invest in the stock market. So before I get started, I want to make the distinction between investing and trading. And my first creative strategy is related to that. So hold tight. Before I get into that first strategy, I need to explain the difference between these two elements, trading versus investing, so that I can actually go on to sharing that creative strategy. So in my mind, trading is buy and sell quickly, right? Typically less than a year. Now, mostly I don't do trading. So you buy a stock, you buy a business, and then within 3 months, 4 months, 6 months, you hopefully achieve your profit target, and then you sell it off. Investing, on the other hand, is long-term in my mind. You are buying into a business because you believe that this business will keep earning more money well in the future. I'm talking about 1 decade, 2 decades, or more. So this is the buy and hold approach. So now that we know the difference between investing and trading, let's talk about the first creative strategy, which is don't sell your shares, just pledge them. So how does this exactly work? Let's say you own Reliance, one of the largest companies in India, or you own, Apple. Apple is the largest company in the world, right? Everybody knows about Apple. So you own either or one of these stocks. Now, let's say your plan is to hold this stock for 5 years in your demat account. What you can do is you can, instead of selling this to invest in the stock market, you can pledge these shares, and against these shares, you can borrow money to invest somewhere else or trade. So let's say you have 5 lakh pieces of stocks in Reliance, and you come across another opportunity. Let's say you want to buy into Axis Bank. So what you can do is you can pledge Reliance with your brokerage, and you can get the capital and then invest in Axis Bank. Once Axis Bank rises in its value, you can sell it off and still hold your original capital with Reliance, right? So this is a really simple but yet effective strategy to raise money. And there are several benefits. One is that when you raise money against the shares that you already own, the paperwork is really simple. In fact, oftentimes there is no paperwork. As long as you sign up for this facility with your brokerage, you can use it as you go along. You don't even have to go into the bank or your brokerage's office, typically like with other loans, right? So when you sign up for a student loan or a personal loan, there's a ton of paperwork you need to do. With this, there isn't a lot of paperwork. 2 is the main advantage of this is that you believe in the stock that you're holding on to. You believe that it's good for 10, 20, 30 years. You don't want to get rid of that position. So while you are borrowing against that initial stock, you are still owning that initial stock. So you're not selling your position to be able to do investing. You're just leveraging off that initial asset you have in one of your stocks. And with this approach, the other benefit is that interest rates are really low. So with, for example, ICICI Direct, the interest rate is as low as 10.5% per year if you pledge against your shares. So that's the first creative strategy I want to share, is don't sell your shares, just pledge them instead and raise money that way. So let's go to strategy number 2. So the second strategy is to utilize what is known as Margin Trade Facility, or MTF is the acronym. With this strategy, essentially what it is that you only have to pay 25% upfront, and the brokerage that you're using will fund the rest of the amount, right? So an example of this is, let's say you want to buy ABC stock for 100,000 rupees or 1 lakh rupees, but you only have 25,000. What you can do is actually only invest 25,000 and let your brokerage fund the rest of the amount. Now, what is going to happen is immediately as you trigger the MTF, the interest will start on day one itself. So you're going to pay interest on a daily basis. Again, the interest can be lower compared to other means of raising capital. It works out to be usually 10 to 11% with brokerages in India. And with this strategy, what you're doing is essentially increasing your buying power. Right? And when you increase your buying power, your ability to multiply profits in a bet that you're making goes significantly up. But there's the danger of this too. The flip side is if you get your bets wrong, you'll also multiply your losses. So I don't recommend this strategy unless you are confident in your circle of competence. And again, I just want to say that I'm not a professional investment advisor. I'm just sharing what I'm learning and discovering. Do your own due diligence in all things investing. But you want to be careful with this particular one. And I always say have a stop loss for such a strategy. So I have a FAQ on executing these MTFs for myself. There are a few technical details you need to know on how to execute this. I made one for myself. If that's going to be helpful for you, just let me know in the comments and I'll make another video on how to execute MTF buys. So let's move to the third strategy, which is my personal favorite because it doesn't involve leverage. This is by far the hardest, and this one involves cutting down on your discretionary spending and using that money to go towards investing. So let's say you are going to restaurants 6 times a month. If you cut that down to 4 or 2, let's say you're buying things that you don't really need. They're more for liberty, leisure, personal fun. If you cut that down, then you have more room to invest that, to put that pool of money into investing. And if you combine the third strategy with the second strategy, so whatever you save and you use that towards MTF, then your buying power, even if it's a small portion of savings, if you combine it with the margin trade facility, now you can multiply that 4x times. Right? So these are 3 creative strategies that I've thought long and hard about. I hope it's useful to you. The first one is for any long-term position you have, don't sell your shares, just pledge them. The second one is to use margin trade facility, or commonly known as MTF. And the third one is to essentially cut down on your discretionary spending, things that you don't really need, and put that money towards investing. So those are the 3 strategies. I just want to end with a word of caution. Investing is a risky game, and to me, I follow the world's best investors, and I love this definition of risk by Warren Buffett. Risk is not knowing what you're doing, right? So really get to know the market, get to know what you don't know. It's known as a circle of competence before you start investing. If you enjoyed this video, please hit the like button, subscribe to my channel, and I will see you next time.